Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to Uncontested Investing. I'm Tim Harridge. Thank you so much for stopping back by. Today, I'm here with one of my all-time favorite humans, Charlie Calise. Charlie, thank you for stopping by, buddy.
Tim, it's great to be here with you.
So, take a minute, tell the audience a little bit about yourself.
Originally from Jacksonville, Florida, moved to Dallas in 1981 on a 3-year plan. And I don't know how many years that is later. Anyway, I got into the advertising business and some years ago started my own company, and since then, had quite a bit of success. And I'm here today, I'm sure, because of my real estate experience. I've had a few cycles at that, so it's been good to me.
So you own a couple HomeVestors franchises as well?
Yeah, I do. I own Imaginuity, which is the agency, and then I have 2 HomeVestors franchises. One's in Dallas, Texas, and the other's in Jacksonville, Florida.
And I know you have a lot of rental properties. I know you got into some multifamily. Didn't you and Lana do some Airbnb type stuff, or is that more like high-end decorating?
Yeah, she's gotten into high-end rehabs.
Gotcha.
Yeah, through our association with HomeVestors and just kind of running across some deals. So, especially coming out of last year, she had a couple really big home runs. Yeah, it was awesome.
So, when I first kind of got to know you, it was Calise Partners.
Right.
And then I believe you acquired Imaginuity.
Yep.
And I think I heard you acquired another firm recently.
We did. We hired a content company called Beacon. Yeah. So, the Calise Partners was really a traditional agency, heavy media capabilities, and part of our vision. We were data before data was cool, and I don't know. Now we've collected billions and billions of rows of data, specifically regarding the single-family housing market. And our vision was to be able to help a customer journey from offline to online and then convert them on any device. And so what we wanted to do was pick up that development side of the house. And so that's why we bought Imaginuity. They were a pretty substantial development firm in Dallas, and we put the two together, and it's been magic.
Not a lot of people know this, but in 2013 early 2014, I became the managing director, head of marketing, sales, and business development for a Blackstone portfolio company. And you were the only person I really knew that knew anything about marketing. And I called, I said, I need someone like that to help me run this. And you introduced me to Robert Greenberg.
Yep.
Who ended up being just the amazing, ran all the marketing for a couple years. Now he's chief marketing officer over at Patch Lending. But you did as a lender, you did all of our direct mail, and then taught us how to integrate the call rail numbers into the CRM. And where did that part of your, I'd say, knowledge or focus, data before data was cool, where did that come from?
Well, as you know, I'm in business with my son Taylor, and Tay very early on had a vision for accumulating this data and being able to use it to optimize our campaigns. And he was a little bit ahead of his time, and what we've been able to do now that I think is really unique is our ability to, once, say, you close a loan or we close a house, we're then able to take that contract data and tie it all the way back to where the lead came from. So we're not optimizing against a lead like, most lead aggregators would do. We're optimizing against a contract, right? So, it's now taking it to a whole nother level, and, we're able to deliver, from what we're able to tell, we're able to deliver, more efficiently, and from a profitability standpoint, our clients, are essentially buying deeper because, we're able to really, really target those houses, that want to sell. And we've had that success in other categories as well. So the methodology works, and we had quite a bit of success, as I remember, in our endeavor.
We had a ton of success.
That was awesome.
I want to do it again. So one of the first segments I do every week is called the bottom line up front. And, people are attention deficit these days. So there's the odds and probabilities someone's listening right now, maybe they don't finish the entire thing. It's pretty high. So I want you to take up to 2 minutes and really just from wherever you're at today in the world, the economy, the geopolitical, macroeconomic, even down to the street level, pour into the listener kind of the 2 minutes of the bottom line up front, the most important things they need to be thinking about, doing or not doing. Good to go?
Good to go, man. This is my favorite part of your show.
Go.
The first thing I want to leave the viewers with, Tim, is broaden your time horizon. So in the fix and flip business especially, where we're kind of wired to just go from one deal to another deal and so forth. Stop, broaden your investment horizon. There's a lot of talk about a single family, a good investment. If you believe that single family is a good investment over the next 20 years, then yes, it's a good investment today. So that's my number one advice. Once you broaden that time horizon, and you and I talked about this the other day, what we're in is a marathon and not a sprint, right? So take a long view. I'm making investment decisions today for great grandchildren 50 years from now that I will never know. And if you think about managing your business that way, you will make smarter decisions over that long term, right? So it's really important. I think once you take that broad perspective and you think about it's a marathon, think about 10xing your business, think about 10xing your life. And whether or not if that's your business, if that's your wife, your family, 10x. You've got a long time now in that time horizon to 10x, right? So think about that. Next advice I have is don't stop at the headline, read the copy. Right now what you're dealing with is the market's crashing and so forth. The market's not crashing, it's correcting. But if you stop at the headline, you're going to be riddled with fear, right? So read the copy. And the last thing I have really is work hard. Right? Working hard overcomes lack of capital, lack of intelligence, smarts, what have you, right? Just work hard, man. It's not, it can be pretty simple. The final thing I have is take care of yourself. It is a marathon and you got to last a long time. And, just like being an athlete, these guys train. And if you think about single family real estate or whatever your business might be and you're watching this podcast, you got to take care of yourself because you're in it for the long run.
All right, so that's great. And I've been talking a lot from stages lately about the power of compounding effort, money, and time. And after doing this for over 20 years, you look back and I tell everybody one more. Like people say, what's my biggest piece of advice? One more. If you think you're going to keep one house this year, keep 2. If you think you're going to keep 1 this month, keep 2. If you think you're going to keep 5 this quarter, keep 6. Because really, when you just look at the power of time and the way that this compounds and compounds and compounds, it's just amazing, isn't it?
It is. Tim, I appreciate you, mentioning that to your listeners. Because, I didn't really wrap my head around this until late in life, right? Yeah. The power of compounding. And, get a compounding calculator, go online, Google one. I don't care if you got $10,000 today, $100,000, what have you. Take that, compound it over 50 years. Slug a 4 in. You think you're going to do a 4? Think you're going to do an 8? What do you think? Right? Slug it in. I don't care if you put a 4 in and you only have $10,000, you're going to have a lot of money over the next 40 to 50 years. And I bet you a lot of your listeners are, young men and women getting into this business, and it's magic. And it's even magic for, I'm not going to call you an older guy, but older
I am.
Guys like me.
And I put this example up. The math to get from 1,000 to 1 million is the exact math as to get from 1 million to 1 billion. It's a comma and 3 zeros. It's the same math. And I think the more we all broaden what's possible in our minds and really look at, like you said, if you start with 10,000, It's your job to compound that as fast as possible. And that may mean selling houses. That may mean moving into bigger deals. It may mean acquiring companies, right? Like I use the example, and then we're going to take a break. Warren Buffett bought a beach house in 1971 for $150,000. At that time in the world, you could buy a single family home in Mesquite, Texas for about $15,000. Well, both investments, both homes went up about 7,000% in 50 years. But the Warren Buffett one ends up being worth $11 million, whereas the other home is only worth $300,000 because you got to do a bigger number quicker and then let time do its magic, right? So I think that's what I'm learning is after 20 years in the business is single family is great, but if you can get into some bigger deals, then the power of time actually works in your favor a lot quicker.
Yeah.
Right.
Here's the thing that I learned. You know, when you talk about 10Xing, that first 10X is the hardest. So it's harder to 10X from 10,000 to 100,000 or from a million to 10 million or 100,000 to a million, what have you. That's the hardest.
Right.
The next one's easier. Believe it or not. I think it's hard for people to wrap their head around 10Xing twice, but the second one's easier than the first one. The first one's the hardest.
Absolutely. We're going to come back. I want to talk more about that and kind of mindset and believing things after a quick break.
Yep.
Stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm here still with my buddy Charlie Calise. Charlie, Jacksonville, Florida. Surely you came from just massive wealth and, Jacksonville's known for, what is it, the Beverly Hills of the East? Or
Yeah,
no, probably not.
Not quite.
Talk about how, you talk about your father a lot to me.
Yeah.
Talk about your kind of background, what brought you to Dallas, and kind of, I try to share with entrepreneurs all the time, the path is confusing when you look at it from the beginning, but once you get there, you kind of look back and like, well, that was easy. So can you talk a little bit of kind of your path and how the different evolutions and goals and initiatives came to play?
Yeah, thanks, man. Thanks for asking. Anytime talk about my dad is a good thing. I'm a product of the 60s, and, North Florida wasn't a great place to be if you were a brown kid. Right? So, it had its struggles, but I was really blessed. I had an incredible support system in my father and my mother, and both of them were their parents immigrated to the United States. My father's family was from Italy. My mother's family was from Lebanon, and so you can imagine all that Mediterranean in one place was a lot to handle, right? So, he schooled me quite a bit. So he'd put me in the car as little as I can remember, and I was with him. And you hear today about kids going to college and the kids that decide not to go to college and that sort of thing. Whatever your path is works for you, but I was really blessed in that I was schooled by him. I was schooled, what do you call that? Homeschooled, if you will. I went to Catholic school, but I was homeschooled by him, if you will.
Right.
Anyway, that led me, through high school and into college, and I really took affinity for the advertising business. The truth of the matter is it was the only way I could get through college without going through calculus, right? And so I got a degree in advertising because I could take statistics and not calculus. So that's how I got here. And, you know, I just loved it, man. I got into that track and the rest was history. And I came to Dallas in 1981, as I mentioned earlier. You know, I was chasing money. I got a few $1,000 raise to come out here. And, you know, I loved it. Dallas was a booming, you know, still a relatively young city. And, you know, we've done really well here. So.
And how old were you then?
Golly, 23, 24?
So there's a lot of people. And when did you get into real estate? Either side hustle or
Yeah, I got into
full-time?
real estate 12 years ago. 12, 13 years ago. You know, I met the guys over at Homevestors, and you know, I drank the Kool-Aid, man. The minute I met those guys and what they were doing, and you might remember, because I think you and I met shortly after that. I came in 2010, so I picked up right as the market skipped up off the bottom. I didn't have to go through the whole downturn that you guys did. I kind of picked it up at the, you know, skipping up off the bottom, and man, it's just been a phenomenal ride for me.
So you mentioned the early 80s. There's a lot of parallels financially for a lot of young entrepreneurs that they've never seen rates like this. They've never seen stock markets like this. They've never seen inflation like this. Are there any parallels that you remember from your kind of early business days that are kind of guiding you at this time of the market?
Yeah, look, I think it's funny how so many of these things seem the same, but they're not. They're different, right? I mean, you know, when you reflect back on 2008, which, you know, was tough, you know, you didn't have the liquidity in the markets that you have today. I'm not sure that I see today really as a crash or a meltdown as much as it is a correction. I think the reality is, you know, and I think about this because I've got young sons that I'm in business with, and you know, these, with exception to maybe COVID, they haven't really been tested until now. And you know, COVID I think was a wake-up call, and I tried to school my kids that when it comes, it's going to come like that. You know, we couldn't predict 9/11 when that happened, right? And you know, you had to deal with it on the fly, and COVID was really the same way. You had a handful of weeks to really deal with that hitting. I think you know, what's interesting about this time that we're in right now is we have had a little bit of time to deal with it. So some real estate markets have taken it on the chin very quickly, but the rest of them have kind of, you know, eased into it. And I think a lot of them are starting to find more firm ground right now. But, you know, look, there's still a lot of liquidity in the market. There's, I don't care what you do, there's not enough housing, period. And now with this downturn, there's not going to be enough housing for the next 10 years. Right. So if you believe in housing over the next 10 years, this is going to be a good investment. So, you know, I think you've got a couple of other sectors out there, not to, you know, get off track.
No, please.
But, you know, oil and gas, you know, we looked at oil and gas very early on. I rode it all the way down to zero on that day that, you know, a barrel of oil hit zero.
Minus $13.
Yeah, whatever it was.
Yeah.
And I tried to buy as much as I could then. And, you know, look at where we are now. I believe in oil long term. There's just not going to be enough. So, you know, I think that real estate's the same way. There's just no math on where you get to enough housing unless, you know, the government steps in and starts building, you know, helping build, you know, houses. I think, you know, back to, I think, your core question, I think you are starting to see mortgage products now modified to meet the, you know, this new economy. I saw something, Bank of America came out, you know, zero down, you know, no points, you know, that kind of thing. So we are starting to see mortgage products modify to meet the consumer needs. And I think you'll see more of that. And as I reflect back, how much of the last 10 years at 3%, 4%, 2% money is really real, you know? So I think you're probably in a more real market today than we have been over the last 10 years.
At one of the conferences I attended in December, I think it was actually the Homevestors Conference, that economist, you were sitting next to me, and he said a reversion.
I thought that was a great line.
And I just, I've used it 10 times in the last couple
Yeah.
weeks, because it's not even a correction as much as like there was this blip of abnormality in the market of ultra low interest and ultra low housing and ultra high liquidity and exuberance, in essence, to get these houses. But volume wise, there wasn't really a lot of it going on. Like it was happening, but not a lot of it. So I feel like you said, we've just kind of reverted back to a normal market. 5-6% is healthy.
It is. I mean, and it'll probably float down. If we think about it, probably float into the 4s. I don't know how long it'll take. The big question is, I believe in simple economics, Tim. It's not hard for me. I think as long as people have their jobs and can provide for their families, things are good. And so how hard does the Fed push, and do you get to a point where there really is big unemployment, and that starts to sting pretty significantly.
We've heard about some different layoffs and things of that nature, but then you kind of peel the onion back, and it was 10,000 people at Facebook or Meta, and ultimately you're at 3% unemployment, so that 10,000 can be absorbed
in no time.
Yeah. So, and I think back to 08, 09, when the only time we had problems in our owner finance properties or our rentals was when Target distribution centers were shut down, right? Or Walmart regional headquarters were consolidated, right? I mean, really and truly, the working class American, they're making double what they were 5 years ago, and there's 2 jobs for every one of them that are willing to work.
Yeah. So, I'm with you. I think you have to also ask how much of that tech was really real. So you were there, I leading up to the .com bust, right? So we crushed it, leading up to that bust. And I'll never forget this. I was in a boardroom. We had a large tech client, and I was given a board presentation. And the former CMO at Coke sat on their board. And they were having a discussion about a cost of a resume. I don't remember. The resume was costing them $2 to acquire, and they were able to sell the resume for $1. And I interrupted in the board meeting, and I said, that math doesn't work. And the former CMO of Coke looked at me and he said, well, you obviously do not understand the business model. And the business model, if you recall, was to get users, right? Not necessarily make money.
Right.
And I think that really repeated itself. When you look at a lot of these tech companies, over the last 10 years, it's really repeated itself. How many of them, including in our segment of real estate, never made a dime and literally are losing billions of dollars, not because the tech platform is not good, it's because the business model doesn't make sense, right? So I think we've just seen a lot of that just repeat itself, and we're kind of revisiting history again.
Speaking of tech, property tech, prop tech, just an industry that's just blowing up. I was reading, there's a group called Fifth Wall out of California. They just did another $800 million raise. How do you look at the property technology industry, specifically with your data and data analytics kind of background? It's still really old school in real estate. Is that an area of disruption for the next kind of housing cycle?
Look, I'm a big believer in technology, as you know. You've watched me for a long time. I think it could be disruptive. I think it's been disruptive. The reality is when you look at property tech and what's happened in our sector, the seller is willing to engage in these platforms, right? I think that as long as the business model can make money, they make sense. The challenge is, and again, you talk about all these raises, these guys have raised phenomenal amounts of money.
Right.
But, how sustainable is it if they can't make money at the model, right?
Exactly.
And so, I answer yes, and I tell this story all the time, and you remember because you were around. We used to use checks at the grocery store, and then we used the debit card, and now you just take and tap your credit card, or you tap with your iPhone. I don't know about your dad, but there was no Zelle app, or
No.
my dad couldn't Venmo me money, right, in the day, right? So, or Zelle me money. So, I'm a big believer in all these platforms. I just think you got to make it, the money has to work.
Right. And speaking of money, we're going to take a break, and we're going to come back for the Money Minute.
Great.
Stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm still here with Charlie. Charlie, it is time for the Money Minute. Imagine there's an entrepreneur out there. Man, it doesn't matter if it's the young Charlie that's about to start his first advertising company, or the Charlie that's in Jacksonville and has to chase the money to Dallas, or if it's the Charlie that just bought a Homevestors franchise. But just imagine there's someone out there that's only going to get 60 seconds of advice all month. So it's got to be the best you got. This is all they get to hear. 60 seconds, pour into the listener. You ready?
All right, here we go.
Go.
Number one, broaden your time horizon. Take a look at 20 years, 30 years, 40-year time horizon. I promise you, download download the app on your iPhone of a compounding calculator. Put whatever number you want in there. 4%, 8%, I don't care. Start with whatever number you got. You look at a 40-year time horizon, you're going to be fine. Number two, build a plan. You're not going to get there, and you've seen this with big companies that have raised hundreds of millions of dollars, and I've watched small entrepreneurs wash out day after day. Why? Because they didn't have a solid plan, a solid business plan that was going to make them money. And the third thing is work hard. This business is not for the faint of heart. Quite honestly, no business. And being an entrepreneur is not for the faint of heart. Work hard. It'll get you through every other shortfall that you've got.
So how many times sitting in the front seat of your dad's car was the message, work hard?
You know, what's interesting is he showed me work hard.
Because that one hits different when it comes, like when you say work hard, like it's hitting different.
Yeah, you know, we have this saying, work hard, nobody cares. Because they don't, right? I mean, that's the reality.
I tell my boys, you are rich, white males. Your mother is the only person that cares about your feelings. You know, you're going to have to work hard and outwork the competition. So I got to get into rapid fire because we're going to run out of time. If you had to pick multifamily, single family, which would you pick?
I'm not sure for the right reason, but I would pick single family. It's because it's what I know, right? So that doesn't necessarily make it right. I also like the fact, especially in this economy, I can be a little bit more nimble with single family if I need to let one go or let two go or, you know, what have you. It's just easier to move one product as opposed to, you know, something larger.
So the liquidity aspect.
Just the liquidity aspect makes sense. You know, it's
Jacksonville or Dallas?
Tough question, because I think all markets are good markets, and you know I get to see all markets, right? I think I'd probably pick Jacksonville, and it's probably because of the property tax structure is a little cheaper, so you can pick up a little better margin in Dallas and in Jacksonville than you can Dallas.
Advertising company, real estate company.
I don't get both.
No, you got to pick.
You could do an advertising company and real estate. Listen, I like real estate, and I'll tell you why. I love real assets, right? And it's funny. We're a really big advertising agency, and we've got huge banking relationships because of just the overall size of the organization. But they don't like the idea that there's not fixed assets there, right? And that's what I love about real estate.
I tell everyone a real estate investment is an inflation-indexed annuity that appreciates and has an underlying asset base, right? Like it's really if you take a institutional mindset and look at it, there's no doubt that billions and billions of dollars are still flocking to the space because it's the only real thing that you own, this thing that prints money that is tied to inflation, but also appreciates to where your capital base increases daily. Oh, and by the way, you get to write the entire thing off.
I love them.
I know.
I mean, I just love them.
So, how nice has it been to be able to work with your children?
It's can't put a price on it. What's really incredible is when you get to a point where your fulfillment really comes from seeing your kids outperform you. You can't put a price on it. It's just the pride, the emotion. It's unbelievable. And, especially when you think about, and I had the privilege of meeting your dad, when you think about the things that your dad taught you, and, I'm close enough that I see what you're teaching your kids, and I like to think I'm doing the same. And you just see that work product, over what is really a relatively short period of time, and you see how these kids are performing. It's just, you can't put a price on it.
You think you'll stay in Dallas when you're done working?
Yes.
Dallas is home?
Dallas is home.
So your father was Italian. Your mother was Lebanese. I didn't know that before today. Your wife is Ukrainian.
She is.
So there's a lot of Mediterranean, Eastern European, Mediterranean
we
going on.
got it all going on at my house.
How do you navigate being a wealthy man and your charitable contributions and being a good steward of what you've been given?
Believe it or not, and this is, I think, an important lesson for probably your listeners, and this, nobody teaches you how to be wealthy. And if you think about most of the guys that I know, I don't really know many guys that were born wealthy. These guys, like yourself, have made every single penny of it. And I think, part of the navigation is that you really don't perceive yourself as being wealthy until until you stop, or you're somehow hiring wealth managers to manage your money, right? There's no rule book. There's no lesson on how to be rich. And it takes a lot of work. I mean, to manage all of these assets, when you think about houses, oil and gas, all the things that people get into by the time they get to be our age, it takes overhead to run it. And it takes structure, tax structure, and good legal advice and good finance advice to manage it. So, how do you become a good steward of it? It's a job, it really is. And we're not trained that way because we weren't born into it, right? So, I've been really blessed in that I have been surrounded by very, very, best in class people in their sectors, yourself included, the folks at Homevestors, wealth managers, no matter what sector that we've been in, I've had the good fortune of being introduced to people that really understood what they were doing. And so, we spend a lot of time learning.
And building a plan.
All
right, man. Well, we are out of time. So do you have any parting thoughts or parting shots?
No, I appreciate you having me on. I watch your podcast and I listen to your podcasts, and I am really proud of the work that you're doing. I'm proud of you, just in that I've known you for such a long time, and I've seen and realized your success. I think that this show is really important, Tim. I think it, especially for young people, I was saying earlier, there's no book, to learn. And I think if you can pick up a few things in each one of these podcasts that, help you with your business and being successful, it's a tremendous value. So I'm grateful to you for having me on and for the work that you're doing.
Well, I'm glad you're here. And if you're listening and you have a company other than a real estate acquisition company, and you need a marketing agency or someone to help you with data analytics and web presences, just Imaginuity.com.
Yep.
They put out some really good blog posts, really good data articles. If you're into the marketing geeky stuff like I am, you should follow it. But we are out of time, and I'll just say there's a lot of gold in the rearview mirror, and I'm glad and I'm fortunate to be able to have someone like you on the show that can help share the wisdom of experience, because so much of it's not in a book, and so much of us saying that people should have a plan is knowing sometimes we didn't.
Yeah.
And so there's a lot of hindsight in that. So, man, I appreciate you being here.
Thanks, Tim.
We are out of time. Thank you for stopping back by. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.